Hello everybody, welcome to this week's MarketMaker.io Bitcoin market update. My name is Quinn, and I'm going to start with this short-term holder cost basis chart that we've been showing over the past few weeks. Unfortunately, we did not get that bullish retest of the $46,000 level that we were talking about last week. You remember we were at that time at around $48,000. If we had come down and bounced off of that level, that would have been quite bullish, and unfortunately, since then, we did not see that happen. We saw the opposite. So we've actually seen, as of right now, a failed underside bearish retest of that level. Until proven otherwise, short term, it's hard to be too bullish or be bullish from a momentum trader perspective until we've actually conquered that level. So as of right now, we flipped back underneath it, and the fear and greed index is unsurprisingly showing full-fledged fear back into the market. We talked last week too about how the open interest levels, this is the amount of leverage in the system, really spiked hard last week, and how that historically coincided with some type of corrective price action, right? Sometimes 20%, 30% we've seen in the past when OI really spikes like that. We did see some of that get washed out earlier this week when we went down to 39,000, 38,000-ish level, but it remains pretty high, so it's reason to expect some further volatility over the next couple of weeks. What seems to be really been moving Bitcoin over the last month, unfortunately, is this correlation with NASDAQ and overall tech stocks, risk stocks. Unfortunately, the market is, right as of right now, treating Bitcoin in the same way. So we saw that correlation really pick up over the past 30 days or so. And remember, this is part of a larger story that we've been going over each week, which is the dollar strengthening. It's what happens globally when the macro environment turns bearish for risk assets. Historically, we were expecting and hoping for some type of rejection if you're bullish on Bitcoin, some type of rejection here, and for the dollar to have a period of weakness, which would make sense because a whole lot has been baked into remember this whole strengthening process for the dollar. We had war with Russia and Ukraine. We've had an entire shift in monetary policy by the Fed and across many major central banks. So it would make sense that we may have hit a peak here in terms of strength of the dollar, and it remains to be seen. As of right now, we are strengthening a bit more than we would have liked to see on this chart, but unless we really move sustained past it, it's hard to put the nail in the coffin of the bearish case, simply because of how much work has been put into getting the dollar here. So we're going to watch that pretty closely, and it's hard to make an argument for a sustained influx of demand into assets such as Bitcoin and crypto while this is happening. So, maybe this continues to strengthen for another week, maybe another month or 2 months, but eventually when this does give, that would be when we would expect some bullish activity to really kick up in crypto once again. If we keep it to crypto specifically, ignore macro for a second, things look quite good. So we do see Ethereum holding up strong against Bitcoin. This typically signals confidence in the market, and historically has not been what we see during bearish periods or just before bearish periods in the market. We don't see this kind of altcoin strength. So that's one promising sign. If you zoom out on the higher time frame, holding this $40,000-ish level is quite important. If we were to break down from there, this chart, this beautiful bullish chart on the longer term time frame, would lose a great deal of its structure and conviction. So it's a bit of a decision point here overall for Bitcoin. If we look on chain, we continue to see some most of what we see that's quite bullish is on the supply side. So Bitcoin continues to leave exchanges at some of the fastest pace ever. We've only seen this kind of Bitcoin leaving exchanges at this speed about 3 times in history before. So again, we've got that accumulation trend going. We've now reached an all-time high in terms of the number of Bitcoin addresses which are statistically unlikely to sell. So sort of a similar story on chain that we've been telling over the past few weeks. On the supply side, you've got the potential, you've got the dry powder there, you've got the bullish story there. However, the demand side is not yet picking up the slack. So as this chart shows us the number of transactions, we're not seeing the influx of interest in Bitcoin that we saw during the bullish phases previously. It's possible here that you could argue that we are seeing a nice uptrend since the May 2021 correction. But again, until we see until we see the dollar weaken, it's unlikely that we're going to see that kind of capital from the wider capital markets flow into perceived to be riskier asset classes such as Bitcoin and crypto. Once we get that demand flowing in, when the macro situation changes, then we've got plenty of dry powder. We've got plenty of supply side potential there for a sustained run and perhaps an all-time high. But it's really going to take that shift in the macro before we see that. So that's the key message for this week. And keep an eye on that $46,000 level. And we'll be back soon. Thanks, guys.